welcome back to the deep dive. You want to get smart, fast on the stuff that really matters, right? Well, that's what we aim for.
Exactly.
Today, we're tackling quite a big one. The idea of a United States sovereign wealth fund.
Hmm.
And this isn't just, theoretical talk. There's actually a live proposal.
Hmm?
Came from the White House back on February 3rd, this year, 2025.
Right. And before we get too deep, maybe we should quickly nail down what a sovereign wealth fund, or SWF, actually is.
Good idea.
Think of it like a national investment pot, basically. It's a fund owned by the state, and it takes surplus cash, could be from different places,
Okay.
and invests it. The goal is to benefit the country's economy and its people over the long haul.
And these things are huge globally, aren't they?
Oh, massive. I saw a recent figure. They controlled something like $11.5 trillion in assets worldwide. Just staggering numbers.
11.5 trillion. Wow. Okay, so this U.S. proposal, the White House plan from February 3rd, it basically told the Secretaries of Commerce and the Treasury to draw up the plans.
Yep, get the ball rolling.
But here's the key thing, right? The actual detailed design, how it would work, still kind of under wraps.
That's exactly right. The specifics, the nuts and bolts, we don't have those yet.
Mm-hmm.
But we can look at why countries usually set these things up and, some of the specific aims being floated for the U.S. version. That gives us a pretty good sense of what they might be trying to do.
So what are the typical reasons?
Well, generally it's about long-term economic stability, trying to maybe reduce dependence on just one or two volatile exports.
Like oil for some countries.
Exactly, or just preserving wealth for future generations, building a nest egg, if you will.
Okay, so zooming in on the U.S. then, what concrete goals are people talking about for this specific fund?
Well, one really interesting idea is using it to sort of supercharge breakthroughs. Science, technology, industry.
How so?
The thinking is you invest in companies that are building on research the government already funded. Taking discoveries from national labs, universities.
Ah, so bridging that gap from lab bench to actual product.
Precisely. It could be a way to translate that innovation pipeline into real economic growth. It's about closing that valley of death for new tech sometimes.
That makes sense.
What else? We're also hearing quite a bit about accelerating the reindustrialization of the country.
Reindustrialization. Okay.
Yeah. So maybe backing funds that specifically put money into manufacturing, advanced robotics, heavy industry, those kinds of areas.
And maybe riskier projects, too.
That's a key part of it, helping fund those really innovative, maybe first-of-their-kind projects, things that traditional private investors might shy away from because they're too uncertain.
Right, those big swings that could pay off massively but are, high risk.
Exactly. So the fund could act as a catalyst there.
And wasn't there also talk about it being like an emergency reserve?
Yes, acting as a sort of financial backstop, emergency reserves for unexpected crises. A national rainy day fund, almost.
Okay, so potential goals are there. But, and this is always a big question, where does the money actually come from?
Mm-hmm.
Especially for something potentially this big.
Ah, yes, the funding question. This is where the conversation gets, shall we say, lively.
Yeah, Matt.
Because, frankly, specific funding sources for this U.S. proposal, they haven't been announced. That's a huge point of discussion and maybe contention.
So what are the ideas floating around? Even the controversial ones.
Well, you hear things like maybe budget surpluses, although, those aren't exactly a regular feature of the U.S. budget lately.
Understatement of the year.
Right. Then there's revenue from natural resources, but the U.S. isn't like, say, Norway or Saudi Arabia in terms of relying heavily on those for government income.
Sure.
And then there's the really, shall we say, bold suggestion of maybe using the Federal Reserve's balance sheet somehow.
Whoa, okay. That sounds like it would set off a massive debate.
Oh, absolutely. Huge questions about inflation, the Fed's independence. Yeah, that one's definitely out there.
So fundamentally, it's just uncertain how it gets capitalized.
Very uncertain and potentially quite controversial depending on the path chosen.
Which actually leads to maybe the most fundamental question of all here. Does it even make sense for a country like the U.S., with, the amount of national debt it has, to be setting up a wealth fund? It feels a bit backwards on the surface.
That's a critical point. It really is. You're asking, should a debtor be setting aside money to invest?
Yeah.
The argument for it usually goes something like this. If the expected return on the SWF's investments is higher than the interest rate the U.S. pays on its debt,
Then mathematically, it could work out over time.
Potentially, yes, it could be financially beneficial in the long run. Plus, you have to factor in those other goals we talked about.
Like boosting industry or resilience.
Exactly. If you achieve those strategic aims, maybe you're willing to accept a slightly lower financial return than you might otherwise demand. It becomes a calculation that isn't purely financial.
So it's a bit of a gamble then. It really hinges on how well the investments perform and how much you value those other strategic goals.
That's a good way to put it. It's definitely not a guaranteed win.
Okay, so we see the potential upside. Let's switch gears now and look at the other side of the coin. The risks, the criticisms people are raising.
Right. And a big one, maybe the biggest, is transparency and accountability.
Why is that so crucial here?
Well, think about it. We're talking about potentially vast sums of public money. Without strict transparency, things can go wrong.
How so?
The Anti-Corruption Data Collective, ACDC, they've done work on this. They highlight that when these funds are opaque, not open to scrutiny, they become vulnerable. Embezzlement, fraud, political manipulation, using the funds for purposes they weren't intended for, it's a real danger.
And are there examples of this happening?
Unfortunately, yes. You don't have to look too far for cautionary tales. The Turkish Wealth Fund, the SWF, often comes up.
What happened there? Or what are the concerns?
Well, the criticism is that there wasn't enough parliamentary oversight, not enough public auditing.
Right.
And some critics argue it essentially became like a parallel budget, outside the normal checks and balances.
A slush fund, almost.
That's the fear. And it's been linked to concerns about increased national debt and, potential misconduct. It serves as a warning about what can happen with weak governance.
So oversight is key. Does that tie into any international standards?
Absolutely. There's something called the Santiago Principles. They're basically widely accepted guidelines for how SWFs should operate.
Okay.
And they really emphasize having a solid legal foundation for the fund and publicly disclosing how it's set up, its structure, its legal basis. Openness is central to those principles.
To prevent that kind of mismanagement or misuse we saw in the Turkish example?
Exactly. Without those kinds of safeguards, the risk profile definitely goes up.
Okay, so that's the financial integrity risk. What about political influence? Could the fund end up just backing like politically favored companies or industries?
That is another major concern. The risk that investment decisions get swayed by political pressure, not purely by economic or financial merit.
Has anyone prominent warned about this?
Yeah, actually. Even former Fed Chair Alan Greenspan years ago cautioned about this kind of risk with government investment vehicles. The worry is you end up propping up certain sectors for non-commercial reasons.
So how do successful funds avoid that? You mentioned Norway earlier.
Norway's fund is often held up as a good example here because it maintains quite a bit of operational independence, meaning its investment decisions are largely shielded from day-to-day politics. They're based primarily on financial criteria, aiming for the best long-term risk-adjusted return.
So that independence is crucial.
It seems to be a key factor in the well-regarded funds.
And do those Santiago principles address this political influence angle too?
They do. They state pretty clearly that the investment decisions should aim to maximize risk-adjusted financial returns based on economic grounds.
Not political ones.
Right. And if, for some reason, non-economic objectives are considered, those need to be clearly spelled out and publicly disclosed.
Transparency again.
Always comes back to transparency and clear rules.
Okay, another risk people mention is market distortion. What does that mean in this context?
Well, because these funds can be so enormous, their actions can actually impact the market itself.
How?
Two main ways. One is crowding out. If the SWF makes huge investments in a certain area, it might soak up all the good opportunities, leaving less room for private investors.
Okay. Like a whale making waves.
Kind of. And the flip side is crowding in. A massive investment from the SWF could artificially inflate the value of certain assets or companies, maybe leading to bubbles.
So its sheer size could unintentionally mess with market dynamics.
It's a potential side effect, yes.
Yeah.
Something that needs careful consideration in how the fund operates.
And what about just basic investment performance? Do these funds always make money?
If only. No, the reality is SWFs have a pretty mixed track record. Some have done very well over the long term, generating great returns.
But others?
Others have definitely struggled. They've posted losses due to market downturns, maybe poor investment choices, or sometimes those governance issues we talked about.
So it's not a magic bullet for generating wealth.
Definitely not. Past performance isn't a guarantee, and they face the same market risks as any large investor.
Okay, so we've dug into the U.S. proposal, the pros, the cons, the risks. Let's broaden out a bit now and look at how other countries do this. Are all SWFs basically the same?
Not at all. There's quite a variety, actually. You can sort of categorize them based on their main purpose.
Ugly.
Well, you have stabilization funds. Their main job is to cushion the economy against short-term shocks, like if a big export commodity price suddenly tanks.
Okay, a buffer.
Then you have savings or reserve funds. Norway's is a classic example, funded by oil money, focused on preserving wealth for the very long term. Intergenerational equity.
Got it.
And then there are development funds. These are more focused on strategic investments within the country, maybe in infrastructure or certain industries, to actively drive economic growth or diversification.
So stabilization, savings, development,
Mhm.
different flavors.
Different primary goals, yeah. Though some funds might have elements of more than one.
And thinking about a potential US SWF, which model might it lean towards? I remember seeing a funny comment somewhere, maybe on Reddit,
Oh, yeah.
contrasting Norway's super strict rules about withdrawing money designed to keep politicians hands off,
Right. The fiscal rule.
versus Saudi Arabia's fund, which is seen as much more directly controlled by the ruling family. It really shows the spectrum, doesn't it?
It absolutely does. It highlights just how critical the governance structure is. Who makes the decisions? Who are they accountable to? What are the rules for taking money out?
Are there other examples of good governance structures we could look at?
Sure. Australia's Future Fund is often mentioned. It has an independent board of guardians making the investment calls.
Independent.
Yeah, arm's length from direct political control. And they report transparently to Parliament. That kind of structure aims for professionalism and accountability.
Seems like a common theme among the successful ones.
Independent governance, clear objectives, transparency, they definitely seem to be hallmarks.
And we even have something kind of like this in the U.S. already, don't we? At the state level.
Ah, you're thinking of the Alaska Permanent Fund.
Yeah.
That's a good point. It operates at the state level, funded by oil revenues, and it has a board of trustees guiding its investments. It's a domestic example, though smaller scale, obviously.
Right. And are things like state pension funds similar?
Similar in some ways, but different in purpose. Public pension funds, PPFs, in the U.S. manage enormous amounts of money, nearly $10 trillion last I saw.
Wow.
But their primary job is managing retirement assets for public employees. And SWF's goal is usually broader, benefiting the nation's economy as a whole, or saving for the future state. Different mandate.
Got it. Okay. Shifting focus again slightly. What about countries that have set up SWFs more recently? Any lessons there? The Philippines, for instance.
The Philippines, yes, they launched one fairly recently. And it's interesting because it kind of highlights some of the very challenges we've been discussing.
Yeah, question.
Well, it was launched despite the country having a budget deficit and significant debt. And while the government stressed it would be managed professionally, non-politically,
There were criticisms.
concerns were raised that, given the debt situation, it could potentially become more of a liability fund if not managed extremely carefully.
So it underlines that risk of starting one when you're already borrowing heavily.
It certainly underscores the need for incredibly prudent management and very clearly defined goals, especially in that kind of fiscal situation. It's not impossible, but the risks are higher.
And one final point before we wrap up. It's worth remembering the U.S. already interacts significantly with these funds, right?
Absolutely crucial point. The U.S. economy is a major destination for global capital, and that includes huge investments from other countries' SWFs.
Like the Saudi investment commitment mentioned recently.
Exactly. That reported $600 billion commitment announced just this month, May 2025. It shows that vast sums from SWFs are already flowing into the U.S., investing in various sectors.
So the U.S. already benefits from SWF investment, just not its own.
Precisely. We're already a big recipient. The debate now is about whether creating our own national fund offers unique advantages that outweigh the costs and risks we've discussed.
Okay, so let's try and bring this all together as we wrap up this deep dive. It's really clear, isn't it? This idea of a U.S. sovereign wealth fund is, well, it's packed with potential, but also loaded with complexity.
Absolutely. On one hand, you have these compelling arguments about fueling innovation, maybe helping to reindustrialize, creating that strategic cushion.
Which all sound pretty good on paper.
They do. But then you have these very significant, very real risks. Transparency or the lack of it, the danger of political meddling, market distortions, and that fundamental question about debt.
Yeah, that debt question looms large.
It does. And as we've seen looking around the world, whether a U.S. SWF succeeds or fails, it's going to come down heavily to the specific design.
Rules, the governance, the oversight.
Exactly. Learning those lessons, both good and bad, from funds elsewhere will be absolutely critical, the safeguards put in place from day one.
So for you, the listener, maybe here's a final thought to chew on as this unfolds.
Yeah.
Given everything we've talked about, the potential, the pitfalls, the global examples, what do you think are the absolute non-negotiable design principles? What must be baked into a U.S. sovereign wealth fund from the start to give the best chance of actually serving the country's long-term economic interests and avoiding those traps we've seen elsewhere?
That's the multi-trillion-dollar question, isn't it?
It really is something to keep thinking about as this proposal moves forward. Thanks for joining us for this deep dive.